We are back on MorningLine talking cryptocurrency, trying to give everyone a little bit of a background. I hope some of it's making sense of it. And thanks to our guest, Professor Joshua White, really knows his stuff from Vanderbilt. I was just telling him during the break, look, I'm not all that savvy when it comes to the conventional stock market. And someone at my age anyway, I think this will be more of something for my son who just graduated from college. With me, unless it really becomes mainstream, I have nothing against it and I'd be open to it, but I could see me never, up till the end of my life, probably being involved in Bitcoin in any way. Simply, I just don't need it, don't care. If at some point I have to, I will. Otherwise, I'm not going to mess with it. It's a young person's thing, isn't it? Even though, I don't know, James sounded a little bit older.
Yeah, so there have been different age demographics that have participated, but the younger demographic, that sort of 19 to 29.
More savvy with computers and understand this, right?
Absolutely, and not only that, I think they want to embrace it. They want to embrace the ability to transact online, to do things that are tech savvy. We sort of saw this with the internet. When the internet came around, younger people embraced it quicker. But there's a lot of startup costs. And because of that, it's going to be key coming out of this legislation is that if we go to a world where cryptocurrencies and digital assets do impact our daily lives for everyone, we're going to need a lot of financial literacy, a lot of financial education, because otherwise the fraudsters you talk about will be attracted to the space.
And that's when I'll have to get involved again. And I have absolutely nothing against it. There's some people like, oh, I don't trust it. I don't go traditional. No, I'm all for it. I like the idea of it moving forward if it's regulated like you are. It's just something that, to this point, because I'm just not as savvy as my son would be, I'm not up to speed on it. And you can understand you're cautious with your money. Now, the one part of it that I started getting a little bit of a better handle on it, because it sounds like more of a tangible investment, even though it's still cyber, is NFTs. So I was talking to Rick, our EP, this morning. He goes, well, now Ringo Starr's got some NFTs out. The Beatles has some NFTs. What does that mean? So what does it stand for again? NFT?
Yeah, so let's go back. So it's a non-fungible token.
Okay, well, I'm sorry, it's what?
Non-fungible token.
Okay, non-fungible token.
And so let's start with the token. Okay. The token is just the identification information on the blockchain. So we spent a lot of time talking about Bitcoin.
Yeah.
Bitcoin is a token.
Yeah.
All right, so there's some code up there that represents what the Bitcoin stands for.
Okay.
Fungible means I can exchange it for the exact same thing. So Bitcoins are fungible tokens because if I give you a Bitcoin and you give me a Bitcoin back, we both have a Bitcoin. Okay. So if we go spend a Bitcoin for somewhere that takes Bitcoins as payment, or if we both convert it to fiat, then we have the same amount. So it's sort of like a $20 bill is fungible, and you can give me two $10 bills, and we have the same thing.
Same thing, gotcha. Okay.
A non-fungible token means it's unique. It represents something unique that is identifiable and irreplaceable.
So which means you can't give me one and me give you one back because yours is unique.
Right. So let's say you had the non-fungible token that represented a very ownership and a very rare collectible item.
Okay.
If there's one of those items, if there's only one NFT that represents that ownership, then I can't give you two NFTs that represent the same thing.
Okay, but now, and this is where it gets so crazy. So it's not like a Honus Wagner baseball card that's worth $1 bazillion. It's the most rare baseball card. This is something that's cyber. It's not tangible. It's nothing I can hold, but it was something maybe created by Ringo Starr. Now, it's not something I can print up and put on the wall, is it? It's just what? It's Ringo Starr says, I'm going to make an NFT, and I'm the one that created this NFT, so I'm just going to hit this button and create something that says Ringo Starr's NFT. And someone's going to say, well, I want one of those. And they're going to pay money for it.
Right, so that's the allure of potentially owning that. Some other collector or investor would want to
I just don't get the allure.
Pay more for it.
I just don't get it. But I guess someone might say, well, what's the allure of investing in a Rembrandt? Well, you can put that on the wall. You can look at it. Can I look at this Ringo Starr NFT?
You can, and you can actually, if it's an image. So a lot of NFTs represent digital art.
Yeah, okay, right. I've seen some of those.
A lot of skeptics have said, well, wait a minute, I can right-click on this image, download it to my computer, and print it off. So you might own this very rare...
A print, yeah.
But it's not the true ownership. And so the NFT represents the true ownership. And so if you've collected, records or things that have limited editions, they typically have numbers on them.
Yes.
And so the NFT is trying to represent some of that this is a very unique copy that's certified and you can verify that is the true owner of this.
It's interesting. Okay, and I understand that because, you'll do that with prints. But like the Mona Lisa, I can print up a Mona Lisa. But if you see the original in the Louvre and you look at it, you can see it's very distinct and different. The original is not like anything other, but I'm guessing that if I print up an NFT, the one I print up is going to look pretty much the same if I print up the original or see the original. The difference is that the original has a kind of a signature attached to it that makes it special.
I like that example. So the Mona Lisa that's in the Louvre belongs to France.
Yeah.
You can buy really nice copies, almost perfect copies of the Mona Lisa and hang them up in your house, but you don't own the Mona Lisa. Right, you own a copy. And so it's the same thing with an NFT for digital art. I can print that out, I can save it, maybe that's very pretty to look at, but I don't actually own that NFT unless I have the NFT.
And that means you own the original, and there's some status that comes with that, I guess. I think we have an example of one of Ringo Starr's NFT. All right, so there you go. Now that is an actual image. I don't know if Ringo himself created it, but the creative mind of the Beatle, Crash 1/4 NFT and Ringo Starr signed print. Now that's pretty neat. Now I could print that up myself, but it would not be the original. If I were to purchase the one that Ringo Starr actually made, the real one, and I can confirm that, I guess, that would be quite expensive, I would imagine.
Correct, and so
and you see right now, that sells for $4,000 currently right now.
Right, and so your hope is if you're buying this, you're either a Ringo Starr fan and you would hold that for a long period of time and you would get some joy out of owning something very rare that Ringo helped create, or you would think that maybe some other fan of Ringo Starr would want to buy it at a higher price down the road. Okay. And so you would buy it and hold it and later sell it and hope to realize a positive
How do you go about
return.
selling it? Do you put it on a marketplace or something? If I had that after a while, is it a digital wallet thing where you?
Yeah, so there's marketplaces. OpenSea is the biggest one where you can transact on these and you trade in cryptocurrencies. And so one of the reasons they've been so popular is a lot of people invested in cryptocurrencies. They did very well in 2021. Now they had all this crypto, but there's not many ways to spend it other than converting it back to fiat currency. And so NFTs took off as a way to sort of park some of that digital wealth that they had created.
But why would you not want to just convert it to fiat, which is normal money?
Well, so you would have the tax implications.
Oh.
So if you bought it very low and you sold it high, then if you convert back, then you're going to pay
If you don't
taxes.
convert, so if you decide you have that and you put it into an NFT, then the tax doesn't hit you at that point until you ultimately sell that, maybe.
Right, so you're potentially storing your wealth that you've created in the NFT.
So when someone says they're a cryptocurrency millionaire, and we've heard a bunch of those, and some of them, it's like they were millionaires one day, and the next day or next month they're almost broke. What happens there?
The prices are so volatile on cryptocurrencies. If you're an investor or you're somebody that wants to participate in this space, you have to have a lot of risk tolerance because of those prices going up and down. I like to say you can't have the rock without the roll. And so cryptos have gone up. This is our second, what we refer to as the crypto winter, which is where prices have come way down from their peaks. The last one, prices dropped about 80% from their peak. I think it's down 50 or 60% right now, so there could be some room to go. We don't know what the trough might be, but if you're an investor in the space, you have to be able to accept a lot of volatility or you'll lose money quickly.
So do you think cryptocurrency is as vulnerable to outside forces like inflation, things like that? People spending it makes sense to me, I guess.
I think so, and the connection there is we have a lot of inflation right now. We had a report last week that inflation's still at record levels since the 80s. And so our tool is a government of fighting inflation. The Federal Reserve tries to raise interest rates.
I was going to say.
And those interest rate raises, how it impacts cryptocurrency is that it makes any cash that you're going to receive from a return out in the future worth less. So there's a time value to money. We know $1 today is worth more than $1 tomorrow. If the Federal Reserve is raising interest rates, then that makes $1 today even more appealing than $1 tomorrow. So these cryptocurrencies are impacted because their use might not happen for 5 or 10 years down the road. And so they're not generating profit now, and so those dollars down the road are worth less now. So that's how interest rates and inflation, we feel it as individuals. My gas that I bought this weekend and groceries were more expensive than they were 6 months ago.
Sure.
But companies also feel it, and that's why the stock market's come down a lot, because those interest rate increases really impact their value today.
Do you think, so are cryptocurrencies now being advocated or talked about by investment counselors as part of a portfolio? I mean, are we seeing investors saying, okay, I've got my stocks and bonds and I want cryptocurrency over here as well? And is it expanding to that point, or can they?
So there were some discussions. There was a Bitcoin ETF.
Yeah, because maybe our station will offer Bitcoin in our 401k. That's where I would consider investing in it, because there would be someone else managing it, and I'd just say, okay, I'm taking this percentage of my salary every month, and I'm putting it into my 401k, and I want 10% here, 50% here, and 40% there.
Right, and so that's also part of this bill that was introduced, is studying the ability to invest in cryptocurrencies as part of your retirement. Because before we do that, we want to make sure a couple of things. We want to make sure the diversification benefit is there.
Yep.
But then we also want to set up some rules where, you know, if you're investing your retirement money in this, you don't want to put 90% of your retirement income in a cryptocurrency. You know, exposing yourself to some risk, diversifying. There's a lot of theories around that show that there's a benefit potentially, but you know, you don't want to put all your eggs again in one basket, and so that's where there's going to be some rules maybe around how much of your retirement portfolio you could invest in cryptocurrency.
Interesting. All right, we'll take a break. Our final segment with our guest right after this. Stay with us.